Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. That is in the UAE, of course. And we've Brent crude oil essentially trading little change this morning, up about making a bit of a climb in recent times, up about 0.5% at 62.38 on Brent. So holding in that solid sort of lower, it's kind of moved from its happy spot of $65 pre the China-US reemergence of the trade war, getting the front headlines at the end of last week. Although we recovered a little bit from the initial shock of that, that continues to be a dominant sort of force on a downward pressure on economic activity, at least the optimism around that. Let's kick off this morning in Algeria with Shoaib Boutamine, energy advisor and CEO of Ranadrill Energy. Shoaib, looking at your perspective, we're trying to get a supply issue here as we move what appears to be not only the China-US face-off, but a period in which we're sort of finally arriving at supply surplus, supply greater than demand, and with that, additional downward pressure on prices. How do you think OPEC Plus is looking at this moment?
Yeah, good morning, Sean. Yeah, I think this is another challenging issue at the moment. It's rising because we have, let's say, the trading war between the United States and China and its impact on the global oil supplies. You know that China is the main provider of rare earths to the world, more than 90%. And if the US will go ahead to impose 100% of of tariffs on China, that will impact directly the global oil prices. So now how the OPEC Plus or OPEC will react to that? I think this is very, this is very tight timed, not only for the OPEC, for the global oil market. Because you know that OPEC took procedures to unwind more barrels to the market. And personally, I was surprised when they decided to unwind more than 137,000 barrels last October, last week. So I think now the OPEC now is ensuring more than
like for example, can Algeria add any more capacity?
Yeah, Algeria has a plan at the moment to invest more than $60 billion in the upcoming.
No, but I mean like idle capacity. Like next week, could Algeria add 1,000 barrels or 10,000 barrels?
Yeah, Algeria has its share as commitment with the group of 8 to unwind if necessary, and it's part of this group. So the share of Algeria is all the time ensured.
But is that on paper or is that in reality? I mean, it seems most secondary sources say that really it's only Saudi Arabia and the UAE that can increase actual capacity. Is Algeria also able to still increase capacity with these raised quotas?
Yeah, I think Algeria can increase, but the quota of Algeria is very limited compared to the one of Saudi Arabia. So it's not really that volume of Saudi Arabia can really unwind.
Of course.
Yeah, exactly. But it has all the time commitment to unwind if necessary. So it's part of that group. So if we talk about Algeria at the moment in the OPEC Plus or a group of 8, it has that share, and Algeria was all the time committed to its engagement. But I have to repeat it: the share of Algeria is not bigger as few members have.
Well, but everything is proportional. The question, exactly, I think, the question everybody's asking is really who can actually increase here? Are we talking about tangible, actual barrels coming to the market, or are we just talking about quotas? And I think Saudi Arabia wants the answer to that question as much as Sean Evers does. Everybody's just trying to discover, it seems, what is the actual capacity ability, and from there we'll build some new ground base production quotas. Let's go to Cyprus. Charles Elinas, not far from you there, Shoaib, in the Mediterranean, CEO of Cyprus Natural Hydrocarbons Company and senior fellow at the Global Energy Center on the Atlantic Council. The other big news overnight, which is part of this wider global trade battle between India and the US. There's China and the US, which is obviously making all the headlines. Now, Trump threw India into the headlines yesterday with some claim that India has now agreed with US demands to stop importing oil from Russia. Your thoughts on that as an outcome? India has remained a little bit quiet since Trump has said that. Your thoughts on that?
Well, that worries me because I think India, we hear stories, contradicting stories. One, that they will reduce import of Russian oil, others that they will continue importing Russian oil. And I think it's going to be somewhere in between. I don't see India avoiding Russian oil altogether. India is not Europe. Europe has decided to cut down any oil imports from Russia altogether by the end of next year. India will continue, I believe, but we have other issues that affect oil supply globally. We also have the low oil prices leading to shale oil reaching a peak, not going very much further than it is at the moment, and possibly going down. There are warnings that shale oil production in the US may also go down. All of these things, I think, are the reason why the oil price, it's not going down significantly. It's going down, but it's staying at a level as if there is an expectation that there is not going to be a glut of oil in the market. There is going to be, and we have also the oil companies coming and telling us that the current surplus is expected to be short term. They expect recovery. Amin Nasser yesterday of Aramco went public to say that oil production globally is not going up as much as, or oil reserves are not going up as much as needed, and he perceives a shortfall, a huge shortfall of oil by 2040 of 10 million barrels of oil a day.
By 2040, Jeannie Mackers, that's a few weeks away. I'm more concerned about tomorrow than 2040.
I agree.
And clearly,
the tomorrow answer lies in what some of the oil companies are saying, that this surplus is going to be short term, very short term. They expect in the medium term recovery, and that's why they're not too concerned about the lower oil prices at present.
Let's go to Bora Bariman, managing partner at Hormuz Straits Partnership. Part of this equation of short term or the potential for tightness may come quicker if one believes the Trump effort to finally curtail Russian supplies. Is that a distraction to other issues that he's trying to get? Or what are your thoughts on US, on the Trump administration sort of breaking up the bromance with Putin and actually now going to really try and tackle this idea of Russian oil flows that Biden seemed to be more than happy to let flow for all the obvious reasons, and Trump initially did? Is this a serious, or is this a distraction? How do you see the Trump-Russia relationship and hence his attempts to curtail oil flows to India and China?
Yes, that's a very interesting question. You know, we've come to observe that Trump is a rule breaker, upending our expectations on the natural order of things, but at the same time, he's the rule maker. So Washington is clearly implementing rules for its allies that abide by the so-called rules-based order that basically create a friction between those nations, say Europe, India. So they're trying to create friction between those blocks and the other side, Russia and China. and they're hoping that these nations will fully fall into place, aligning behind the strategy of, on the face of it, hostility towards Beijing and Moscow, but I think underneath it, the more fundamental part of the strategy is dependence on the United States. So, yes, he may talk about sanctioning Russian oil, but I think he really wants to just cut more deals for America's oil interests that might basically put a kind of a backstop or a floor on America's exposure to this decline in the fundamental oil price, right? If there are some trade barriers with getting cheaper oil from Russia, then maybe some of the U.S. supply is ensured a certain position in the marketplace, even in this sort of bearish outlook.
Interesting. Choi, but looking at that space in the market, and we were talking earlier about where is this remaining idle capacity? Does Algeria have any? Does anybody have much other than the Gulf states? I think we were operating in a world for a long time in the 5 years since COVID with this sort of general market sentiment that, oh my goodness, there's so much idle supply available in the OPEC plus that's 5-6 million barrels. Even a war between Israel and Iran didn't move the needle on the oil price. What do you think the current outlook for that bucket of idle capacity is now? And as OPEC plus continues to increase every month, as you said, only 130,000 or whatever, but still every month for the last 8 months increases. What's that idle capacity look like now? And what will it look like over the coming 12 months?
Yeah, exactly, Sean. I think you have seen, or have you viewed the International Energy Agency reports that reporting that 26th will have a glut of 4 million barrels of oil. This is about the International Energy Agency, but this is
Say
not,
that again. In 2026,
we'll have a glut of oil, 4 million barrels in
a
26.
day.
Yeah, we'll have 4 million barrels.
Greater
And
supply, greater than demand, 4 million barrels.
Exactly. Yeah, this is
Wow.
what has been reported a few days ago by International Energy Agency. But these numbers are not mathematics. This is not like predictions, okay? And OPEC Plus has its vision, a different vision compared to the International Energy Agency. But I have to say that this glut, we know that we have a glut, but we don't have exact number. We have a glut in the market, but this glut did not really participate to drop the price of oil compared to the crisis of 2014, when the prices dropped to minus, let's say, $28. Now, even we have a remarkable glut in the market, but it's participating to stabilize the global oil market and the prices. And this is a good positive thing of the glut we have today. This glut, even we have war in the tension in the Middle East, we have like a war in Russia and Ukraine, and we have a trade war between US and China. But even these challenges, the prices still stabilized, let's say 65, 67, but it didn't drop to less than $30. And this is a good point of this glut. It's like secure, it's a saving, it's like a reserve for the global, and the global market is taking a profit of this. The second thing, positive thing of this glut we have at the moment in the market is it put like renewables investors in comfort zone. So they have a good backup of fossils or of oil in the market. So they can plan, let's say they can plan ahead, and that's why they are investing in renewables. And this is a good point, I think, for advantage of this glut. So talking about the OPEC and the OPEC, let's say in the upcoming months, I think as I had all the time, it's very tight market at the moment. But if I say that Donald Trump declared that India accepted to not buy anymore the Indian oil, this is a good opportunity for the OPEC members, let's say Saudi Arabia and Iraq and also UAE, to take market share in the Indian market. We have to note that India is buying.
Take it back.
Exactly, is taking India is buying like 1.6 million barrels of oil from Russia. So now Saudi Arabia can come back. It's same for Iraq, for example. And this is a huge opportunity for them. So the glut we have in the market could be, let's say, not really absorbed, but could be a
It
change
might
of
be.
routes.
It could be a good time, Charles. Your thoughts on that? It could be a
Exactly.
good time to go after those Russian barrels, where it wasn't during Biden's time, but now there's a window of opportunity because it won't elevate the price too much if you try and tackle those Russian barrels because demand is weak and there is this excess idle supply. What are your thoughts on that, Charles?
Well, I mean, you have to also remember that Russian oil exports are down because of the attacks by Ukrainian drones on oil installations in Russia. So that also creates a shortfall in supply from Russia to be provided by others. I think others will step in to cover that shortfall. But as I said before, the oil companies don't seem to be overly concerned about the current situation. They really see it as short term. Darren Woods of ExxonMobil says that before the middle of next year, prices will be back to $65 per barrel. So they seem to be fairly confident that the demand is going to be better than IEA is predicting. And we have a history of IEA under predicting demand for the last 10 years. So even though their announcement of this huge surplus next year had an impact on the oil prices, we saw almost an immediate recovery. The market doesn't seem to believe that the IEA's predictions can be relied upon because of their history. So we have all these factors that indicate that perhaps by next year, even though this year there will be a surplus and prices will go probably further down, by next year they will recover to the level expected by the oil companies, to probably $65 per barrel.
Looking at that, Bora, from the point of view of global growth, I mean, with the big question and the year that we've been in, that this excess supply was going to finally tip over and push prices down, and that is coming in the fourth quarter, or in this quarter we are in. But global economic growth is holding on. I mean, despite all the Trump stuff and despite all of the conflicts, etc., we've got an anemic growth in Europe, but nonetheless growth, not recession. US is still creeping along. China seems to have the power and the stimulus to keep things moving. Your thoughts on this sort of global economic outlook? Pretty resilient.
I would say so. You know, the pessimist in me recalls all types of analogies to the Smoot-Hawley tariffs that preceded the breakdown of the world order before World War II. But those were between, you know, major trading blocs. What I see that the U.S. is not so much a trading nation. It's not, even during the golden days, it's not a major exporting nation. It's not a major manufacturing nation. I mean, it is, but not of a manufactured goods. It is an exporter of services. All our software licenses and the such, as you will appreciate. And what we see is for, you know, materials, for you know, the fundamental components of every type of manufactured good, there is a large trade going on, as reflected by China's increase in trade and exports to nations like, you name it, Vietnam, Korea, all around the world, right? So there's a kind of a reconfiguration of these flows around the boulders in the riverbed, right? And Trump is the big boulder in the riverbed. And I think American supply chains are also potentially adapting to that. And there are these kind of secondary imports, Chinese components going into products made in Vietnam coming back to the United
I mean, it gets
States.
complicated when you get into the granular dodging of, it's like oil ship to ship, mid-ocean ship to ship trading. But
But
looking
I think
at,
America is making it hard on itself with, further secondary sanctions, as which occurred uh,
if
in the
indeed
case of
they're
Nexperia, right, on
enforced,
those semiconductors. So then
yeah.
the Dutch state takes over a company that's very much reliant on rare earths and other technologies from China. So then, what have you taken over, basically? Um, is there value in what you have just done?
Where does the
And
Fed go with all this? I mean, the latest news yesterday, the Fed now, the market's betting on maybe even a 50 basis point cut. I mean, is there that scale of weak drama in the market, in the economy? I mean, we're talking about a resilient global economy here, and the markets are screaming at a Fed for a 50 basis point cut.
I think the politicians are screaming at the Fed for that. And what the markets observe is that the institutions like the Fed are increasingly amenable, exposed to political pressure like that. So then they will anticipate that the Fed will follow through and succumb to that pressure. I think that's what's being reflected in the market.
Yeah, everything seems to be a gold buy. Let's go to the survey question that is sort of coming back to the India point. Who believes? I wonder, was that news to Narendra Modi yesterday when he saw that announcement by Trump after their phone call? India won't give up on discounted Russian oil imports. Do you agree or disagree? India won't give up. Agree with that, won't give up. Or do you disagree? And indeed, India will give up. But India won't give up on discounted Russian oil imports. Take your pick there. Shoaib, looking on that, and you mentioned there the idea that Algeria have putting a lot of money or plans for future capacity investment. Generally, at the moment, at $60 oil, it seems, and hence what the Saudi Aramco CEO was saying earlier this week in London, that not enough oil or not enough money is being invested in the ground for new capacity. But yet you're indicating Algeria has that money and will do so. And do you think other marginal oil producers will follow and do the same?
Yeah, exactly, Sean. I have to remember everybody that global oil supply, global energy supply is still relying on 80% on fossils. So this is just an update to remind everybody that we still need all kinds of energy, oil, natural gas, coal, and renewables, and all of them have to be let's say take part of this energy mix. So Algeria in the last few days signed an important agreement with the Saudi company called Midad. The agreement is $5.4 billion. This is a huge investment is coming to Algeria now. And the second thing is that Algeria National Oil Company, Sonatrach, is in advanced negotiations with ExxonMobil and Chevron, and both managers of this company's VPs, they were with us here in exhibition in Algeria here. So negotiation, Algeria is still attracting investors in for the oil and gas and even for renewables. I think this is what the international energy is saying is about the GLAD, about this. We have to accept that oil and gas will sustain longer with us. And that's why if we say oil company, it has to keep investing in oil. If we have a renewable energies company, it has to invest. So Aramco, for example, or Sonatrach, Algerian Sonatrach, or all companies in the world, national or IOCs, they keep investing. Let me remind everybody that ExxonMobil investing a lot in Guyana. Now, at the moment, they are producing like 740,000 barrels of oil per day. And they are focused, the target is to produce less than, let's say, 0.9 million barrels of oil by the end of the year. So all giants in the world, they are investing in oil. But the key for these companies to sustain longer is to apply technology to decarbonize, to reduce the carbon footprint. This is the key, but they have to keep investing. We have the tools, we have investment. So if we don't keep investing in oil, we will have a gap. We are coming in the winter season. We will have like a cold. We have temperatures may drop to -20, -15, -10 in many countries. So all the time renewables, we cannot find renewables. Wind energy, wind doesn't blow, sun doesn't shine. So we need oil, we need natural gas. So we have to be logic when we talk about oil and gas.
That
That's
could
why.
certainly there could be a rhythm there. There could be a riff, a rap there. The wind doesn't blow and the sun don't. Even the
Yeah.
Germans have names for that. They were apparently the biggest trending name in words in German social media last year. Whatever the German word for those two things are, the wind don't blow and the sun don't shine. It was there. Charles, I want to get your thoughts on what's going on in the East Med in your neighborhood. If you take out a stone and throw it in the water out there, you're going to hit a rig anywhere. Where's the development now that whatever's happening in Gaza, some sense of at least, inshallah, some peace and quiet for a while? Is there any thoughts of that going to reinvigorate the development of the East Med?
Well, certainly in Egypt, there have been new pledges by BP and Eni for new investments. BP is going to invest over 5 billion over the next few years, and Eni about 8 billion. Egypt itself has pledged to drill more wells over the next 3-4 years. So that there appears to be activity in Egypt, but you have to treat that with a pinch of salt. I mean, Egypt comes up with these plans all of the time, and then the debt to the oil companies goes up, and then things slow down. The fact of the matter, though, is that there is concerted effort to increase production in Egypt. At the moment, gas production is going down significantly. We had the deal between the Leviathan gas field in Israel and the Egyptians to export something like $35 billion worth of gas between now and 2040 from Israel. But during the Gaza skirmishes, Netanyahu put not a stop to that, but froze that deal because Egypt was building troops on Sinai. We haven't heard anything about that being lifted, but it seems that now that Gaza is going in the right direction, if it continues to do that, that ban will be lifted, and that gas to Egypt will help Egypt tremendously. In the meanwhile, in Cyprus, one of the small gas fields, Kronos, is being developed, and Eni expects that to export gas to Egypt by the end of 2027. So there are activities in the region, but much will depend on whether the situation in Gaza continues to improve or whether we revert back to problems, especially the relationship between Israel and Egypt, which at the moment seems to be fraught. And if exports of Israeli gas to Egypt don't increase, Egypt will be obliged to continue importing huge amounts of LNG at a huge cost to its economy. And if that cost continues to build up, then there is less money to invest in new exploration and production. So it's like a vicious circle.
Yeah. Bora, just coming back to the point we were making earlier about the price of money, i.e. interest rates, the Fed reducing interest rates, and where that intersects with access to capital or incentive for major oil producers to invest in new capacity. You said there the majors seem quite content. We've heard a few of them in London this week. And the Oxy CEO did caveat the sort of fairly muted contentment with requiring further capital discipline, that the idea that there wouldn't be a wave of new supply coming too quickly. The last time we saw money get really cheap 10 years ago, as it went down to essentially zero for a decade, all sorts of crazy money was thrown at new supply, easy access to capital. What are your thoughts on that intersection now going forward if we are going into a sort of a more accelerated rate cut cycle? Could that trigger greater spending on greater access to capital for the oil industry?
I do think that the market to finance the capex in the oil sector has warmed, especially if compared to, let's say, 5 years ago. There isn't the kind of stifling push from the investment funds that control a lot of the banks to reduce their exposure to hydrocarbons. So I think the main question will be the oil price outlook. If we have some visibility in a confident range that oil will stay around 60 or 65, I think a lot of new projects can get the financing, especially if they have very strong sponsors, like you mentioned, Oxy and other national oil companies and Western majors. Still, I think it might be a rough patch for the independents and the minnows that used to be funded on the AIM market. That market has essentially evaporated, but there are strong independents. And I think the market is relatively more benign toward them than it was certainly 5 years ago.
The great challenge with the US play, the shale play, is that they've got to invest so much money just to keep capacity at current levels because the decline rates are so high. We'll have to watch that space to see is the appetite in the US majors, because of course the more money they put in the ground, the lower the oil price can go. So it's a bit of a challenge that they also face. So nobody's believing that Narendra Modi is doing anything anytime soon to turn the phone off with Mr. Putin. I would tend to agree with that. We'll wrap it up there. Russian oil continue to flow to India until further notice. Charles Elinas in Cyprus, thank you so much. As always, great to see you. Shoaib Boutamin in Algeria and Bora Bariman in London. Sadly, not on the Med, Bora, but you're close. You're close. You're close. But your homeland is there on the Med with lots of Med coastline and beautiful ones as well. And apparently attracting huge amounts of tourists now these days to Turkey's Mediterranean coast. I need to get there myself. Have a great day and great weekend, everybody. All the best and thank you.
Bye-bye. Thank you.